Hi, my name is Sunil Fernandez and I'm the managing editor of goodreturns.in. I'm here to do a quick roundup of the day's business developments as well as stock market roundup. Let's tell you what happened in the stock markets today. It was one of the worst days for the stock market since August 2015, and the Sensex had its biggest ever fall since August 2015. It was an extremely weak day with stocks having sold across the board, selling thanks to the problems with coronavirus and the fatal deaths that have occurred, as well as a crash in crude prices. Now let's break this up into two. First, let's talk of crude prices and why crude prices impacted the stock markets the world over. As we speak, the Asian markets, of course, are closed. And let's first tell you what happened with the closing in the Sensex and the Nifty. The Sensex closed by a whopping 1,941 points lower. That's almost 2,000 points cut on the Sensex. It ended the day at 35,634 points. And the Nifty lost 538 points to close at 10,451 points. Two of the main reasons for the crash in the stock markets: crude oil and coronavirus. Let's tell you a little bit more on why crude oil prices resulted in a crash in the stock markets. Now, crude prices fell as much as 30%. The crude futures fell as much as 30%. Now, when you've not seen that kind of a fall in crude prices since the Lehman Brothers crisis of 2008. So there was a really sharp fall in crude oil prices. Now, why did crude oil prices fall? Crude oil prices fell because OPEC countries and its ally Russia could not agree on production cuts. And now, it was a thought that because of the coronavirus, if they agree on production cuts, it would help stabilize or even take crude oil prices higher. But OPEC and its ally Russia could not agree. Remember, Saudi, which is a part of OPEC, and Russia are two of the biggest crude oil producers in the world. So we had disagreement over production cuts, and Saudi Arabia, which is a part of OPEC, decided to increase production and slash crude prices. This resulted in a dramatic fall in crude prices of almost 30%. So what's it got to do with the stock markets? Most analysts believe that crude prices will now remain in the $30, $40, $50 a barrel, and this is not going to be good for crude oil producers. And this is particularly not going to be good for shale oil producers in the US, who are over leveraged, which means they are they've had huge debts on their books, and this may have a cascading effect on banks, because some of these leveraged companies would find the going very difficult with crude at $30, $40 and $50 a barrel. This led to a sharp fall in stocks as well. Now, coronavirus, of course, we all know, coronavirus also resulted in some deaths. The worry was really from the European markets. We had Lombardy in Italy being completely quarantined, and which affects the movement, and it was believed that the government there will lock out northern part of Israel, which would impact the movement of 16 million people because of the coronavirus. This led to sharp selling in European markets as well as they opened, and so the entire markets and entire globe was seeing massive selling pressure across the board. As far as Indian stocks were concerned, let's talk particularly of two heavyweight stocks, Reliance Industries and ONGC. Reliance Industries crashed as much as 11-12% in trade today. Now, you don't see that happening very often. If Reliance crashes to that extent, it will bring down the stock markets. Now, why did Reliance crash as much as 11 to 12%? One of the reasons believed is that if crude oil prices crash, Saudi Aramco may not invest into Reliance Industries. Remember, it's looking at picking up a stake in Reliance Industries. So that stake would have helped Reliance to become a zero debt company. But if Saudi Aramco does not invest in Reliance, then it's difficult to see how Reliance could become a debt-free company. This worries led to a sharp sell-off in the stock of Reliance Industries, which fell. Now, another stock that fell really was ONGC. It's crashed to a 15-year low. The reason, of course, is crude prices. I mean, ONGC's fortunes are directly linked to crude prices because ONGC explores oil and gas. So to that extent, its fortunes are linked. If crude prices crash, ONGC's financial performance is expected to be much lower. Now, there was actually across the board selling even in financial. Something like RBL Bank fell as much as 20%. Now, there are worries again in smaller private sector banks after the Yes Bank issue. It started impacting smaller private sector banks. People are worried how safe their deposits are. This led to some massive cuts in private sector banks like RBL Bank, down almost 19-20% today in trade. You had the entire housing finance pack, PNB Housing, LIC Housing, all coming crashing down in trade thanks to the worries over Yes Bank, though SBI is picking up a stake in Yes Bank. So the real worries over Yes Bank led to the financial pack as also selling. So it was actually coronavirus, crude oil, and Yes Bank all having a cascading impact on the market. Going forward, we expect tomorrow is going to be a holiday on account of Holi, so some respite for the markets. On Wednesday, the markets will again react to global developments. If you have some positive news on coronavirus, the infections abating, you might see a swift and sharp recovery in the markets. But for now, the markets have closed clearly at a 15-month low. That's it from me for now. Thank you for watching. Keep watching our market roundup and market review. We'll be back on Wednesday. Thank you so much.